we're gonna.
Are we gonna start off with like a little roundup of how everyone's Christmas
Yeah,
was?
we're going live now. Just so you know, just
Like a little
here
roundup
we go.
of how
Here we
everyone's
go.
Christmas
Yeah,
was.
we're going live now. We are live. Just so you know, just. We were live about a minute
A
ago.
little roundup of how
Here we
everyone's
go.
Christmas
Yeah.
was.
I can hear like some background.
We were live.
Yeah.
Yeah. Here we go. Right. Hello. We are live.
Happy New Year, everyone.
As
Hello,
probably
team.
does with it's what is it, 6th of January. We're a bit slow off the mark this morning, so we're sort of, is it live? Are we not live? Are we live? Well, we are live, by the way. So good morning, gents.
Morning.
How are we?
Good morning.
Good. Very well.
Good. Good. Good to see you all. Everyone had a good break?
Yes.
Beautiful.
Been really good, actually. Yeah.
I'm in the middle. In the middle.
You
Started
mean
off well. I thought I'll have a nice little. Basically, I think for the last 2 or 3 Christmases has always been the start of a new project. I don't know why it always seems to fall around Christmas that it's like a couple of weeks before, get handed some keys, and then I just want to get in there. So I use that sort of Christmas break to do like a big rip out or what have you. But this year I've treated myself and I'm like, there's nothing. There's literally, I'm like, I can actually just chill over Christmas. And I was like, I'm going to really use this to my advantage. So yeah, we did the first week. We did the present giving. The second week, oh my God, we literally all got just slapped in the face, and all of us in our household were housebound for 7 days, and we were all ill. And but we slowly took it in turns. Like my partner started, and a day later, I joined her, and then like another day later, my son did, and then a couple of days later, the other one did. So we're still not out of the woodwork. We're still fighting strong. Uh, but yeah, today was my first official back to work day. Today's so, but no, it was lovely. But a lot of
I heard there's quite a bit of a bug going around this Christmas. There are quite a few friends who are hit with it, which is unfortunate. But good to see that you're on the mend and just in time to then go and put ourselves in an incredibly cold environment and get it all again, which is which maybe we should start off with because we had a little call last night, didn't we, as a team regarding our upcoming expedition, which I think is are we allowed to call it an expedition, David?
Yeah.
I mean, I think I'd say it's
Definitely.
pretty expedition. It falls in that definition, doesn't it? So for those who are unaware, we are heading off to Norway this time next month. So actually, our next YouTube live date, which is the 3rd, I think it is, of February, the first Tuesday of the month, we are actually going to be in Norway on a train into the middle of, I think, nowhere. I think it's probably fair to say, to embark on a what's the best way to say this? An expedition across, I don't think it's quite the Arctic Circle, but it's not far off. Probably, I don't know, a meter's deep worth of snow, -20. There's 8 of us heading off to raise money for two incredible charities. They do a lot of hard work, a lot of graft behind the scenes. And I think that's the thing with a number of charities, great charities like this, they do a lot. We don't really truly understand or appreciate what people do behind the scenes within these charities, but we're out there to raise money to impact positively the people that these charities are going to, and I'll put some links below this video shortly to those 2 charities. So we're going with 2 relatively famous faces as well who head up those charities. So first of all, we've got Fatima Whitbread, so it's Fatima's UK campaign, and also Speedo Mick Foundation. So Mick Cullen, who walked from, was it Land's End to John O'Groats in his Speedos a few years back over winter. So we're expecting, I think we've already had a sneak peek of the blue furry thong that he's got. He's going to be donning while we're there. So it's going to be some trip. I'm certainly on one side looking forward to it. On the other side, absolutely like bricking it a little bit. I'm not going to lie. All I'm going to say is bold people get colder easier is the truth, isn't it, Dave?
All I'm going to say is I got some Speedos for Christmas and I'm absolutely buzzing.
Well, I didn't.
It's going to be chilly.
Be buzzing. So it's going to be cold. It's going to be tough. We're going to be hiking, I think over 100k or so within and then camping every night as well. So it's literally the second we step off that train, it's basically us, a tent, a couple of hand warmers, and the wilderness. So it's going to be some graft.
Yeah, it's effectively cross-country skiing, isn't it? So where places where we set up camp as well, like the snow is potentially going to be too deep to even get out with your skis and step onto. So it's going to be skis to tent, tent to skis type setup. Hopefully, might be some northern lights. That'd be pretty good. Definitely no polar bears. So
there are there's a couple of I suppose pleas from you guys watching. Of course, I hope you're all keeping well and doing well. And thanks for being here this morning. But the first one is, if you run a business and you would like to be part of our expedition, and we help get some branding out there. So of course, with two big, fairly famous faces, they've got TV slots, radio slots, quite a lot of PR opportunities. We are looking for some corporate sponsors to help us put a bit of money behind the expedition, help cover a few costs. Of course, put it towards the charities as well. So if you have a business and you're happy to give us a few £100 just towards the charity and also the trip, please reach out to myself, David, or any one of us really. DM us in YouTube or also in our WhatsApp group or via our socials. On Instagram is the best place to get hold of us, Property Entrepreneurs Club. We'll hook you up, we'll get your logos out there, we'll get your faces out there and your brand as well. That'd be fantastic. But of course, if you don't want to do that and you just want to give us a few quid, a few leftover pennies from New Year's Eve, whatever you've got rolling around the bottom of your pocket, then there will be links below this video just to donate to the cause, two wonderful causes, like I've said. Every penny is massively appreciated, and we're incredibly grateful for that. So yeah, that's a little bit about. I wasn't planning on doing that first, but I thought you mentioned the cold, Luke, so might as well segue it in. Yeah, I don't know what we'll do next month, whether we'll be able to go live from Norway, but we'll see. We'll see.
The Starlink's not going to be reliable enough. I wouldn't have thought it may be, but I wouldn't want to.
We might have to delay.
Starlink. It sounds like a spaceship. Like, bring out the Starlink.
Well, Elon Musk is coming, isn't he? So,
how's everyone been finding training? Like, before we dive property, but like, have you done much? What have you been doing? Like, because I'm really struggling because obviously we're pulling pulks, so I'm like, how would you replicate that? Like pulling.
Pull a tire.
The tire that you got just in the garden, yeah, just pull that.
Pull a car.
Pull a car.
I've just been pulling the car everywhere I go.
Come on, kids, get in the car after school. What are you getting in, Dad? Well, I'm training. Turn left.
Probably just get in the gym, mate. Get in the gym. Pull a sled or something like that. That'd be good. But anyway, should we talk property? That's what we're here to talk about.
We probably should. We probably should. So we were back in the office yesterday, weren't we? And we had a really exciting start to the year, getting our head back into some bookkeeping and reconciliation. That was just a totally fun day back in the office, just really enjoying it. Really, back in zero.
Realities of life, though, isn't it, Sam? I think this is the thing. It's all great posting and seeing people post on social media about all these wonderful deals they're doing and perceivably doing, but there's actually a lot of graft behind the scenes that needs to be done. Otherwise, to keep the ship afloat. So, yeah, realities of running a business, isn't it? Finances, bookkeeping, admin, paperwork. It's got to be done. So, if you can kind of get it condensed and done in a day or two, you can focus on the fun stuff like this.
It's definitely my least favorite job, but I think once we get some of it plowed out, I definitely feel in a better place.
Yeah, I feel like a bit of that kind of post-Christmas clog that needs to be just like organised. Do you guys get the same? Like early Jan, just want to just organise stuff and clean stuff. Clean the office, get the house organised a bit more, get the all those little jobs that have just been on the back of your mind for months just cleared. Are you like that in January, or are you just like whatever?
I've brought 8 litres of paint to paint the bedroom. I'll let you know once.
That's a lot of paint.
I'll let you know when that paint is applied to the wall. And I think it's exactly the same. You start cleansing. So like, yeah, let's go and buy the paint, but guaranteed that paint is not going on the wall for another couple of months, if at all. I don't know, because there's other little things that crop in, and I don't know, you have this space and time to be like, okay, let's let's start thinking about your personal life and like, oh, let's. I did clean the cupboard the other day actually, and got some little storage pots. Loved it. But no, I do have a bit of a cleanse.
Good.
I will agree with that.
So
Good.
what are we talking about today? What is the headline
So we're
statement?
talking today, our headline topic, after that 10-minute segue of randomness a little bit, is about rates. So obviously, David, yeah, I know your message. I know you're close to the ground with regards to mortgage rates. I mean, that's your business. You're your mortgage broker. For anyone who's unaware, if you need one, hook up David. He'll definitely be able to support you and help you in that respect. And you throw us a few suggestions out, say, look, guys, there's something rumbling on in the background here. I think we need to talk about. So, do you wanna sort of set the scene, David, as to what your
Yeah, sure.
thoughts are, and then we can dive into it.
Yeah, so lending, everybody runs a bit, obviously runs a business, like mortgage lenders, whether that's bridgers, buy-to-let financiers, resi, whatever, all operate typically on a quarterly basis. So they will have targets at the start of the year for each quarter, and normally what happens is the start of the first week, or the weekend before the first full trading week, pretty much the entire market comes out with their new rates, which are typically keenly priced, usually a slight reduction on December's rates, and essentially something to spur some movement on. When the minute that you get to the middle of December, there's a lethargy for having applications in, because lenders just don't want the business. They want to basically switch off for a couple of weeks. It's a good time to reset lending criteria. It's a good time to clean out pipelines, and it's a good time to kind of get ready for a fresh start. Obviously, there's a number of things in the press at the minute, or geopolitically, a number of things which are causing a significant amount of hesitation or negative thought. And as of Monday, it was only HSBC who'd actually dropped any rates at all, which is incredibly surprising. So I'm not sure if that's just a delay, and maybe the rates and stuff will come out at the start of next week, or I don't really know, or is it just a case of they're reeling from what's been appearing in the news and just waiting to try and work out what the political outcome is. Either way, I think it's a bad thing, because all it's doing is delaying decisions. I think a lot of people have delayed refinancing the tail end of the year because they were expecting keener rates, as has always happened. And the reality is, all that's happening by people sitting on the fence is that they're going to have to catch up at some point in the next 6 to 8 weeks. And then what will happen is the legals will all fall over, because the majority of people are remortgaging, for example, whether they're raising finance, or just doing like for like, whatever. If they're using free solicitors, which most will, there's no point in paying for them if you don't need to, the legal process will fall over, because it's going to be delayed, and that is just not helpful for anybody. So back to the usual thing: if you've got finance outstanding, it's sorted out immediately. There is an argument to say that interest rates may rise. I guess it just depends on geopolitics.
Oh, sorry, Luke. I was just going to ask a question there, but go for it, mate. You go.
No, I was just going to sort of backtrack and just again, if people are listening or watching, when you say like things are happening in the press that are sort of not necessarily manipulating it, but um, what are those things that you're sort of edging towards that you think are causing this
Yeah, I mean, that's very simple
period?
questions
Let's say.
about the rate as well, which is that, and also how much of an impact does it actually have, really, these events?
Well, I think the biggest impact it has is on hesitation. It's hesitation for banks to basically put their stall out, without knowing what the impact is potentially going to be. And the biggest thing with geopolitics is confidence. In the same way that there'll be lots of smaller investors are currently sat not wanting to move because they want to see where the market's going to go. Whereas in reality, we should all be cracking on and basically doing more deals. the less that people do, and the less the market moves, the less less going to happen. I mean, it's silly. There's no point in just sitting waiting for good times, because that they never come. And people in the property market make money by being in the market, not by sitting looking. So I think what will actually happen is that through this year there'll be a bigger spread of the smaller landlords versus the more professional set up property entities, regardless of what your what strategy you're applying. But I do think it will also prompt a lot of really, really good deals. There's going to be a lot of people who are saying, well, just don't have the confidence in the banks, just don't have the confidence in the market, we just want to get out. And so those who are actually in the market, I think, have got a really, really good opportunity. Yes, rates may be probably slightly higher than was anticipated. I think we really would have liked to have seen a drop in a lot of the rates of about 0.1, 0.2. But the reality is, if that doesn't happen, rates are still pretty good now. Get on and move.
Yeah.
I think.
It's interesting. I mean, I think this is it's funny, isn't it? We have, how many of these kind of conversations have we had over the last however many years we've been doing this for, right? Where we started off in Clubhouse, I think during COVID time. I mean, we've obviously known each other a lot longer than that, but in more sort of these content creating type of conversations, I think we've probably had this conversation, I don't know, 3, 4, 5 times a year, right?
Yeah.
And it's funny because it's all that it's kind of the crystal ball stuff, which I think is almost impossible. Well, it is impossible, not almost. It is. It's a definition of impossible to get to predict what's going to happen, right? But I feel this year it kind of feels a little bit different. I feel that I can almost see like in real world signs of markets slowing down, people tightening their belts, economy slowing down, but also nervousness and sort of fear in a number of people to actually do anything because of what might happen now. Not to say that any of them are right, but I think and coming back to your point about the geopolitical situations. I mean, bad news, bad political stories. It's been in the media for ever and a day, right? So that's not going to change. I
Sells
think
newspapers, doesn't it? That's why.
Exactly. I think more people are becoming more aware and maybe a little bit more sort of they're sort of questioning a lot of what's being put out there a little bit as well, as to the true motives behind media events and sort of topics of discussion, etc. This Venezuelan thing going on with Donald Trump at the moment and all this kind of stuff that's causing some friction. Questions there is why is this happening now? Is that what's the sort of the play of the bigger chess game underneath? Then there usually is one. Usually is one. Not only that, but what else is actually really truly happening underneath this big news sort of release, this big headline event? Like, stuff is happening probably behind the scenes that's just being sort of almost like swept under the carpet a little bit, or to get away with. So they're the things we need to look at. But my point is, coming back to what you said a moment, David, which is opportunity for those who are active, I think still is probably bigger now than there has been, and that's because more people are more afraid. I think more people are doing less deals. You can see the market stagnating, definitely, in terms of number of transactions, number of properties being sold. I think that's partly in the UK here, done and driven by some of the policies and the budget and the economic side of things with tax and stuff. But that is going to create, a lot more opportunity for those who are active. Now, quantifying that opportunity, how good is it? That's then the next question, right? Because with that, on the flip side, like anything, everything in the world, I believe, happens in equilibrium, right? There is going to be a bit more risk, and the risk is going to be on debt. And so I think, if you look at, for example, the UK, the 10-year UK gilt yield is around 4.5%, 5%, I believe, at the moment. That's pretty high. So for people to borrow money usually less than that is quite rare. And so if rates are lower than that, which they are at the moment, then you could sort of say, well, that is one indication to suggest that the rates will go up at some point because of that equilibrium that needs to be created from a financial perspective and an economic perspective, right? So I think that's one marker to keep our eye on. And in terms of therefore what we're talking about today, which is about will the rates rise, I think they will this year. I think they will rise. I think they will probably steadily rise over the forthcoming few years. We might have the odd light up and down like most things. But what that means in 5 years' time, okay, for people who are buying stock on 5-year fixed rate mortgages, remortgaging stuff into new 5-year products, I think in 5 years' time, the rates are probably going to be, if they're at 4.5 now, they're probably going to be at least a percentage or 2 points higher in my best guess in 5 years in 2030. So I think with all property transactions, we need to be taking a balanced view of today, short term, mid and long, right? So what are some of the things that we're doing now that we can maybe turn around quickly where we're not really taking the risk of debt or the cost of debt, but also if we're building portfolios for the longer term, what is the impact going to be on the debt to equity ratios, but also the cost in terms of cash flow and cost of debt in 5-10 years time, which is, I think, a really, really key factor that a lot of people don't consider when they're getting into deals. They just look at right now, but it's the 5-year horizon, I think. So yeah, it's an interesting one. And again, we don't know. We still don't know. We won't ever know. But I certainly am looking at stuff which is, okay, well, if we're going to refinance now, we can pick it up on depending what it is, let's say a semi-commercial, we're doing at the moment, semi-commercial around 6%. That's probably going to cost us around 8% in 5 years' time. So really, we need to ensure that in 5 years' time, we've got enough cash flow or headroom to cover that 8%. And so we're like kind of running those numbers now on 8%. It still works, still a good deal. So that's the kind of the way that we then quantify the quality of those deals.
I think also it's the not necessarily just the rate, but the fees to get the product as well. And that especially when the fees are put onto the end of the loan sort of thing. So when it actually comes to the end, you're not paying back like, I don't know, 300 grand, you're paying back 310 or whatever. So it's like, will there be that growth in that time? And if you're only getting a product that's 2 years long, will there be growth of 10 grand in within sort of 2 years? I don't know. I don't know, David, did you see anyone sort of taking out products and it's the fee on the back end that is affecting them?
Yeah, if you look at some of the lenders in the marketplace who are structuring, I mean, lenders make their money from interest rate and fees. We all know that. But if you look at the impact of people who've chosen a lesser rate and paid a bigger fee for that, essentially what they're doing is loading the debt onto the property. Now, some of the fees can be quite toppy. So let's say you have a 5% fee. Let's put numbers on it. Let's say, for sake of argument, you buy a property for 200 grand. You pay a 5% fee on that, on the lending to get a lesser rate, so it cash flows better at a higher interest rate. We go 2 or 5 years down the line, the property value's downvalued. What was originally 75% could now be 85%. So you've just got to be really careful in forward thinking and not having a too short a term a view of things, because you're just in not paying the higher rate now and basically making something cash flow. You're just basically pushing it down the line. Now that's fine if you're going to sell, that's not a problem. If you're going to dispose, that's not an issue. But what you can't do is continue to refinance unless the property values are going up. So you see a lot, especially the smaller buy-to-lets, that's exactly what's happening. Because they've not gone up in value, people have opted for lesser rates, or because it looks nice, as opposed to looking at the overall cost, and it will come back to bite them. So I think if you look at lenders like Together, for example, they limit the lending at 75%. And the reason they do that is to make sure that regardless what happens in the future, they should be able to refinance at 75%, either with them or elsewhere. Whereas if you look at people who are just adding fees, it's not a never-ending meal. It just doesn't work. I think what will probably happen is that the people who make the most money will have the most flexibility. So the landlords who on a standard buy-to-let basis who are able to stick with run-of-the-mill lenders like a BM or TMW, where they're always going to consistently have a decent product transfer offering, a decent range of products which are market leading, which is great because it means that the overall debt, which is the biggest pressure on people, is comfortable.
Yeah. And I think it's getting that balance and understanding obviously the cost of refinancing as well. But I think also then in terms of longer term strategy and balancing your debt levels is well, obviously compounding, right? So of course, adding fees to loans are going to compound. So if you're adding a 3% fee to a 500 grand loan, there's 15 grand that's being added that is then going to compound over the next 5 years, and then in 5 years' time, you're going to refinance the same 515k with another 3% fee. That's now more, and then that's going to compound in terms of certainly the overall value. So there's one thing to consider, but then equally on the flip side, you've also got the compounding effect working in your favour in terms of if you were to take 500,000 of your own money and put that into one property, cash, the capital appreciation or the value of inflation, of course, one, but also of the value of the asset over 10 years will increase that to a certain point. Whereas if you do borrow the 500k and then put a smaller amount of deposit in, then of course that cost of or that debt is working in your favor from an inflationary perspective as well. So actually you're kind of getting a double compounding effect that's working both up and down in terms of the cost of debt, but also in terms of the capital appreciation of the asset. So it's the balance.
And you can't really fully calculate that either, can you? Because we can't forecast what a property is going to be worth in 5 years, but we can kind of do some due diligence and kind of do a best guess based on historical values and stuff like that. So yeah, if you're borrowing a lump of money, parking it in there, value's going up, but then the debt's going up as well. So yeah, it makes a lot of sense.
I think it comes out to like wider strategy, right? So coming back to that kind of, for example, like if you're borrowing 500,000 of which is debt, and let's say the property is 750k, right? Roughly, it's just rough figures right now. It's a lot of money, but just to keep the simple figures, that 500k, if you can keep that at 500k for the next 10 years, obviously the value should and hopefully will go up, which means you've got a bigger headroom that then is available to you. That when you sell, okay, you're gonna have to pay some tax on that on the appreciation side, but that 500k is still 500k. Now, inflationary, that the cost of that will drop because the value of 500k in 10 years' time is going to be less than the value of 500k now. So actually, the cost for you to pay it back in 10 years' time is less in real world terms, right? So that's kind of what I mean. But I think the other part of that is from a strategic kind of wider wealth perspective is understanding and linking it back into like the cost of debt and like will rates rise, and understanding how that will then like impacts the real world kind of that money in your pocket. Locking it in at 4% today over 5 years compared to even 5% today over 5 years, and the impact that's going to have is going to be quite significant in that 5-year time frame, right? And I think a lot of people don't consider inflation with this. Like if you think about the average property price, for example, I saw something the other day, which was the average property price. If we compare the average property price today in 2025 to the average property price in 1995, so 30 years, and we take that same, or we extrapolate that same level of growth over the next 30 years, so in 2055, then the average house price in London is currently sat around 500k. So in London, the average house price in 2055 is going to be around 3 million, right? So there's obviously shows the impact of inflation. The minimum wage today is £12 something. I think, not, don't quote me exactly on it, but around 12 quid. In 30 years' time, based on the growth rate over the last 30 years, the minimum wage is going to be per hour is going to be £42, I think, or something like that. So there's obviously going to be quite a bit amount of growth, which means that everyone's going to be a millionaire in 30 years. Asset value is going to go up quite significantly, hopefully, in 30 years. So if we can keep our debt levels consistent, then the actual headroom we're going to have is going to be significant compared to what our debt is. I think for many people, it's managing the cash flow and not being greedy over the next 30 years. And I think that is the biggest thing for most investors. It's trying to not live off every penny that they make now. It's waiting. And unfortunately, in a landscape where everything is instant and we want everything now, that's probably the biggest challenge for most people.
You're on mute, Sam.
Just on that point, just a little one-liner. According to Savills data, over the past 70 years, the average UK house price has risen by 365%, even on an inflation-adjusted basis.
Yeah, and I think, again, we've talked about this lots over the years. UK housing market, how good is it as an investment? I think obviously it is good, it's strong. There's a lot of factors for and against, like most asset classes, and nothing's perfect. Taxation is on the rise in the UK, I feel, and the longer Labour stays in power, that's probably only going to get worse for us as landlords and the middle classes in terms of that wealth bracket. But you've then got to look at what the alternatives are. What are the other alternatives? And I think one of the things which is why we love property in particular is because we can manipulate it. We know how to add value to stuff. We can buy something for X today, do something to it, and it'll be worth Y within a year, right? There are not many asset classes that you can do that. And not only that, apply leverage to it as well, right? And actually borrow money against it because of the surety of the bricks and mortar. So I think, yeah.
The sort of knowing kind of like what you've just explained there and your sort of mindset and say future projections, let's say, and you've sort of touched on sort of 5 years, 10 years down the line, but also this time, with it being obviously our first one in January, what are your plans for January? I don't know if you and Sam have had a chat about it, or David, have you got any sort of I feel rates are heading this way, that way? What are people's sort of thoughts and sort of plans for the year?
Do you want to go first, David?
I think the value for us is going to be client relationships moving forward. I think in the last couple of years we've suffered as a corporate entity, basically giving too many people time. Now the problem, that's all well and good. Service and talking to people is one thing, but it's got to be financially viable. And I think one of the biggest problems in financial services is you're going to see a split between people who are able to give time to clients on what they need, and those who are just doing smaller deals, which are unfortunately it's just not worth doing. The problem that you have is that everybody needs the same level of advice, but if you're borrowing 50 grand on a small buy to let, for example, as a business, it's genuinely, unless you're some kind of streamlined, no attention to the client, no time to the client, it's just not worth doing anymore. And I think that's a bad thing. So I think the people who are really going to benefit from that are basically those with more money doing more deals are going to get a lot more attention and a lot more specialist advice. So, but the problem is that's the way the market's going. I'm not saying it's right, but we've got to run a business as everybody else does. The marketplace is definitely becoming more specialist. It's definitely become and will become more grown up, which I think is a really good thing. I think the lender's understanding of people's businesses, models, and different strategies is a lot better, and that's a great thing, because people are actually, instead of paying more for a perceived risk, they're getting better deals now than they have done in the past. So that's a good thing. And the vanilla, the vanilla product transfer side of things is as cheap as it's ever been, which is brilliant. That's a really, for people who are just doing like for like and sitting on things, that's a good thing. But I think it'll be interesting to see. You've mentioned properties where they've gone up by X% just by inflation. I think the key point in the property game for the next year is going to be accelerating that growth and picking a strategy which does that faster. So everybody talks about 10xing this and 10xing that. I think the key point is to accelerate the growth by whatever strategy you're doing, minimize the costs and the hindrances. And I still think property is a very, very viable business. I think the attention to detail is going to need to be better. It's interesting you're talking about doing accounting. I've just been doing. We use an accounting package, and it's so simple to do. But it's really interesting to go through what we spend money on, what networks we're paying to be part of, what's actually worthwhile paying for. I think people are going to hone in their costs and really look at who's actually adding value to them, whether that's accounting, legal, financial services, trades. Relationships will become more important than ever in the next 12 months. And that's just the way that is the way it's always been. But I think that you add a little bit of pressure, whether it's political, taxation, whatever, that's going to become clearer.
Yeah, no, I agree. I completely agree with that. I think what are my goals? This trouble this time of year, beginning of January. What's your goals for the year? What's your goals for the year? I think
Not necessarily just your goals, but your like outlook for the year, kind of with your sort of personal perception and feeling on how the year is looking from every angle within property.
Yeah,
I think
mean,
with
my
the
first
G,
goal. I was going to say
I
my
was just going to
first
say
goal is to stay alive when we go to Norway. That's the first goal. That's the first goal. But go on then, Sam. Carry on, mate.
just going to say, yeah, from like an Agito point of view, so Tan and our business, we're kind of head down, looking a little bit more strategically into a couple of specific areas. We'd like to continue to grow some of our like investor relations. We want to work more closely with specific investors, and kind of dial in on exactly what that involves in terms of what projects that's going to go into. So yeah, it's definitely a growth thing. We talk about growth all the time, don't we? Like we want to grow as a business. We want to do more deals, but we want to hone in on it. We want to be more specific, which I think we've almost got a handle on, and we've come up with a bit of a plan that we want to start talking about with our investors, and hopefully move forward into Q1 with that mindset, really.
When you talk about investors, are you doing that because it gives you more scope and more flexibility and not the ties and encumbrances of kind of regulated lending, as it were?
Yeah, that's one reason.
I feel like, I think we with time, the longer you're in this business, I think the longer you sort of are able to build decent relationships with people, and you guys know you work with investors as well. It offers something slightly different. I think it doesn't tie you in quite so much. It gives you a bit more flexibility to be a bit more creative in certain deals. A project that might, you could turn around in a short time frame, might picking up bridging, providing you in a leg measurement and everything, and the speed to kind of get that on the table, it can get easier, but like everything, there's pros and cons. But I think with some of our relationships that we've built over the last couple of years, some of the investors that have helped us, they're quite easy, they're chilled, like how much you need, when do you need it, here you go, kind of thing. It does open up the market for us, which is great. It means that we can move quickly on stuff. It means that we can have conversations one day, change our mind, or situations change the next, and have not that much of an impact.
Flexibility, isn't it?
So flexibility is a good thing. I think as well, part of the plan and outlook, Luke, for me personally, but also as for the business, is a bit of a balancing. So I'm still from a personal perspective, my own personal portfolio, I'm still sort of balancing that a little bit. So exiting, I'm selling a couple of stock, improving some stock there. Also looking now sort of stage life, which is to longer term, kind of 20 years till I'm pension kind of age. Starting to think, okay, now maybe we start putting some stock into pension, whereas up till now it's been needing access to that income to recycle and grow and live off a bit. So having the flexibility. So one eye now is sort of on that longer term future. But then at the same time, with the Gita, what we're doing there is it's a case of now still growing, because we've got some goals that we want to achieve. We have some targets that we want to grow to, and yeah, and going out buying portfolios, for example. I think coming back to your point before, David, about there's a lot of nervousness. I think there are people with larger portfolios, fairly vanilla stuff,
Absolutely.
which has got opportunity to either pick up on things like vendor finance, perhaps under market as well by buying at discount, but then could have opportunity to convert some into different exits, HMOs, supported living, breaking them up into multiple units and stuff like that. So that's the kind of thing we're also now looking at.
Do you think the pubs are still a viable business?
Yes,
With what you've done,
and I think we've been done, as we've done a few. Yes, still very much so, because they're still closing at a higher rate than they are opening. But
there's definitely a model there there's definitely a model to follow, isn't there? It's just a timepiece. Obviously, they're longer term plays in terms of the project's length, because of the planning, because of the upset it can cause within the community. There's just more unknowns in terms of timeframes and what you're going to have to go through to get that planning.
So the answer is yes. I think there's still opportunity there. It's still something we're looking at, but it's then balancing that with now a different sort of risk profile of project. Because like Sam says, most of the time you buy in a pub, it could have like not sit too well with local communities that you're changing that pub, even though it hasn't worked, even though they never actually went there and supported in the first place. It's just the fact that it was a pub and pubs are closing. You then typically got planning as well, because you can't get PD change of use on pubs because they're sui gen. So you need to go for a full planning app if you want to convert it into anything like resi, really. So it's quite a higher risk project, and the timescale as well. So and a lot of pub owners aren't necessarily open to the idea of options either. So because it might be much larger, a huge portfolio, it's one of these large Wellington pubs or whatever, Punch, and they just want to get rid. They're not interested in doing anything with the developer. Some are, but not all. So that's where buying at risk, in the hope that you're going to get planning, it's quite a risky play, but they can be lucrative, as we know. So,
but yeah, ultimately there is definitely a play there for sure.
There is. There's so many. There are so many pubs that close that it just you drive past and just think there's something. There's an answer to that.
Yeah, and it's kind of like the most recent one we did. We had to go to planning committee meeting, and kind of the biggest feel that we got from it was the worry about kind of the tenants that were going to be in the HMO, but you can't discriminate against that either way. And then also creating a smaller kind of tap room within that bar, so you're shrinking the commercial area on the ground floor to maintain a community space, as it were, as a tap room. So that was well supported. But I mean, a lot of it's so opinionated around what they would accept and what they wouldn't accept. But when it actually comes to policy, it's kind of like, well, their business model and vision for what they want to do here is actually going to bring benefit to the community ultimately. So,
I mean, there are certain pubs in certain areas, in particular locations, that we are able to identify, and this is kind of like that's it's got a higher chance of conversion because of a number of factors. And I think, having done some, we kind of know what they are now. If you own a pub and you're watching this and you want to ask us our opinion, feel free to reach out to us. We'll obviously have a chat with you. But there are pubs with opportunity, whether they've got large beer gardens in certain areas of potential conversion, splitting up or whatever, car parks, those kind of things. There are still opportunities out there for sure in that space. But again, I think there's still lots. There's always stuff out there. There's land with planning, without planning. There's we talked before in previous editions. High streets are screaming out for developers to go in and do something there, and there's good opportunity still there in certain towns that are developing and with good kind of infrastructure or sort of investment coming into them. There's loads of places around the UK with that opportunity still.
Do you think there's going to be one strategy that's going to outstrip others? If you had to pick one or two,
If I had to pick one, I think it would be converting commercial to resi into.
I wouldn't necessarily say is there one. I think
Mm.
I think things now need to be done en masse. I think just doing like something small, like I don't know, just keep it simple, having like a standard townhouse and then you turn it into I don't know, 4 or 5 bed HMO. It's like it just doesn't stack anymore. Well, like 90% of the time won't stack. But if you're then taking a property and you can convert the loft and you can extend out the back and you can have like 10, 12 rooms, then all of a sudden it then becomes a viable project. So I think I always see things of like now doing it en masse as opposed to um, keeping it small and intimate, let's say. I don't know, would you agree, disagree?
Yeah, like, yes, I think that probably applies to most businesses because you've got economies of scale with that as well. Also, if you are doing it en masse, you've got the opportunity to potentially take a slightly lesser margin because you're doing volume, the lower margins are acceptable. But again, everything there, like I said, we've mentioned the quick equilibrium, like there comes offsets, the pros and cons, right? Doing more means more staff, doing more means more money, more debt, higher risk in that respect, more management of that. So it does come down to the individual. But I think in terms of strategy, I still do feel commercial is a good one because you can buy it at slightly lower rates. Okay, you've got to do a conversion, but I feel that if you really want to make money, property, you're going to have to do something of that ilk anyway, to add value. But then going into sort of maybe larger HMOs, sort of mid-size HMOs are good because you can get good end valuations as well. If you can get long-term contracts on the back end, that can give some assurance as well and de-risk it a little bit. So I think despite building costs going up, I think there's ways of managing that. And I think that's probably where the opportunities also lie. But
Do you think
I
it's
think
gonna
there's one strategy, like they've said.
Do you think it's going to be an ideal size for HMOs?
I think it's
It
totally
sounds like
dependent.
everyone's pushing up into like everyone's sui gen, aim for that commercial valuation. No, I never hear anyone saying like, oh yeah, I'm doing a 4 or 5 bed HMO. Everyone now seems to be very much like 8, 12, 15 like beds. And that just seems to be like the trend of kind of what I'm hearing um, around it. Same with sort of like the apart hotels. It's like doing like a 10 bed apart hotel just isn't viable. Where as soon as you start going 15 and above, then it's like, okay, now it works.
Yeah.
Yeah.
I think HMOs will remain a solid strategy for a lot of people because it gives you multiple exits which are lower risk. You know, for example, going out and buying a plot of land and putting 5, £1 million houses on there in sort of the area that I'm in, sort of in the southeast. It sounds great, love the idea of doing that, but then you've got to sell £5 million houses, right? And find 5 buyers who are then going to complete on that, who are then going to pay the stamp duty rates that they're going to pay. So again, good money in that. You know, if you think about if you're working off a 25% margin on 5 million, you should be making over £1 million, but all your profits typically in that last house, usually. So that is then very market linked. So if you're selling as an exit, you've got to think about the market you're selling into. Again, there's money to be made, but then that's got to be balanced with something else. Whereas I think HMOs, you can do either. You can sell them and refinance them and tenant them. You know, you've got options there, and I think that's why a lot of people like them. But yeah, again, how many people want to live in an HMO? I think there are people
I
out
suppose
there.
it's more how many people don't have a choice, but then that's
Yeah.
all they can cater for, especially
It's
with
also
like
it's also a very good like starting point for some people though, isn't it? Like, and it's shorter term.
Yeah.
It's got its benefits for sure.
It definitely they have a place for sure. They definitely have a place. I mean, the other thing that I was talking with somebody recently about and heard it actually on the news is also the whole asylum seeker thing. You know, they want to move them out of hotels. They want to move them into purpose-built accommodation. That's causing a bit of friction because it's going to potentially take away social housing from people who actually want social housing. So there might be a social housing play, with some local council and government funding to help build, to then provide social housing stock. Not many people really think about that because they think of the PRS, private rental sector, has got more margin and more money, but actually the social housing sector is huge. It's actually bigger than the PRS. And I think a lot of people don't really know where to start when it comes to social housing, but there are definitely opportunities in that as well, for people who are willing to do the graft and put in the effort to build those relationships in the right places. You know, we're looking at some social housing. We've got some social housing stuff, Sam. That's another area and sector that I think people may want to look into as well this year, because of the not only the size but also the demand on that side of things too. But
what about you, Luke? Where's
yeah.
your head at leading into the new year after your big project?
Me this year, I when we had our sort of mastermind thing at Christmas, obviously, I I pushed myself heavily into sort of like personal life. Really, it's holidays. I found the last sort of 5 6 years, it has been non-stop, like just throughout. It's just go 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 go. And there's a time where I'm a bit like I need to sort of just take a chill pill just for even just a day. Like, do you know what I mean? So yeah, holidays was my sort of key thing. So we're 2 flights now. Obviously, we've got Norway in February. We're going to Lanzarote Easter. Um, Looking at a little, it's my partner's 40th in July, so maybe a little surprise trip there. And then I'm just like heavily deep, and the algorithms have taken over of Lapland 2026. So finishing the year off in Lapland. So yeah, I know the ins and outs of Finland now, like the back of my hand. Like I'm ready for Santa Claus Village. Yeah, so that's the kind of like how the way that we want to kind of like end the year. So now I've got like them all in order. In terms of from a property perspective, uh, obviously I said before Christmas that we put planning in for a change of use for the upstairs of the apart hotel, to get another 5 rooms up there. I didn't think when we purchased the building that we would need planning, but a planning enforcement officer thought differently. So obviously respecting him, we sort of put planning in. Oh, literally since last February up until December, it has been just back and forth, just constantly challenging. Well, why do we need that? And then they'll go down another avenue, pulling all the strings of like, well, you need this, you need that. It ended up in the start of December with habitation mitigation bill of coming out at like about 30 grand, and it was like this is ridiculous. Again, kicking back, and just before Christmas, I actually received an email, and the planning officer had obviously gone to their legal team. Bear in mind, this has been going on now for 10 months, and came back and went, "Oh, just to inform you that we've spoken to our legal team, and they've come back and they said for the scheme that you want to do, you don't need planning." I was just like, I told you this at the start. I said from the start, it doesn't require planning, and that's why I've always just been throwing back loads of questions and sort of bits of policy, etc., being like, "Well, you can't do that because of X, Y, and Z," and then they pulled out something else, and then they finally realised that we don't need planning. So on one side, it's really annoying because it's put us 10 months behind, but on the other side, we can now push forward and we can finish the last 7 rooms and get them signed off. So yeah, starting on Monday. We've got the chippies going in. We're getting the last 5 kitchenettes put in those rooms. Then we can then put the fuse boards in. We can then get building control out just to sign off what the little changes that we've made. And then yeah, we should have another 5 rooms open sort of mid to end of March, hopefully, all being well. So yeah, so the other thing as well with planning is obviously they said you don't need it. So I was like, hang on a minute, if this anything ever crops up in the future, I need some written headed paper document or whatever. And they were like, oh, you just need to put in for a certificate of lawful for lawful use. I was like, so now I need to spend more money to get and require to get that, but also pretty much start again to get you to sign that off. I was like, can't you just accept the planning application with no conditions? It's pretty much you get to the same finish line. So yeah, so that's what they're doing. So they put on an extension of time, and that was the 5th, which was yesterday. So we haven't received anything. So I'm hoping today I should receive an application which is not needed but has been approved. So yeah, nearly a year.
Isn't the
Nearly
maddest
a
thing
year.
about that, like, there's just no accountability on the council whatsoever. Like, the impact
Nothing.
on your business is just ridiculous,
Yeah.
and there's just nothing you can kick back with.
Yeah. When we're sort of, you think 7 rooms on a short let basis, with the projection of each one to bring in sort of £1,000 a month, and then over 10 months, that's a hell of a lot of money, which has just been lost. And then we've had to put so many different fees out and everything. It's mental. It's absolutely insane. Um, but yeah, so the aim is to get that up, get that operational, get it working, get someone overseeing that final last little bit, so then I can basically move forward from it. And then on the other side is the 1 to 2 bed conversions, and yeah, put an offer in actually on one just before Christmas, and yeah, talking about sort of rates and everything. I obviously ran numbers, etc. We put an offer in 30% below the asking. They've come back with a counter offer at 25% below the offering.
That's
So,
brilliant.
That's a
It just
decent.
goes to show.
yeah, so it shows like where things are going. I did back everything up with a lot of like, I've got to this price because of X, Y, and Z. You can see on the market, this is reduced by this is reduced by this. It's all low lease flats. So again, it's looking well, who are buying low lease flats at the moment? What people are yeah, what rate are they selling at? And they're just not budging. So then obviously they're just bringing the prices down and down and down. So then you're sort of leaning against them. So I put a counter offer in last night. So hopefully that should come back, and yeah, there should at least be 27% below the initial asking price. So we'll see how
Would
that
you
goes.
would you would you do the apart hotel scenario again now? I mean, you've learned so much over the last 24 months. I mean, you're just listening to you, your knowledge base of every like the whole thing is just streets, streets apart. Would you
I
do it
have
again?
I have learned a hell of a lot, shall we say, especially more so just the world of hospitality, and just understanding that key avatar of what a guest looks like, I suppose. Would I do it again? 100%. Am I going to do it again? 100%. It's the business plan isn't necessarily just let's just open up an apart hotel. It is it's a chain. It's going to be a chain around the New Forest. Um, Again, it's that as soon as you get your turnover over £1 million a year, then that's when the multipliers hit the business. So the whole setup is for it to be sold in within the next sort of 10 years. But yeah, it's getting that turnover right up there, and
Wow.
then I can work from that to
Yeah.
get the multipliers to offload it all. So that's the plan. But the little 1 to 2 bed flats, it's just I find them brilliant for cash flow. They're all money out deals, and yeah, they're just it's that peace of mind knowing that if I don't know the world crumbles and all of a sudden you have to be 2 meters apart again or whatever, and you can't put anyone in short-term lets or some weird thing happens, I've got the peace of mind knowing that the portfolio is paying the bills, even just down to like the last week of being ill, just being like, well, if that was a month
Long
or
term.
whatever, it's just ring fencing the family really, which is always the at the forefront really. But yeah, in a
And I'm
very
I think as well, I think you're the type of person who will make it happen. And I think that's a big part of it. It's about the having the drive and the focus and the dedication. And no matter what challenges you'll get, which you will, as you have on this one, you'll make it happen, mate. So
yeah, I think we all do though, don't we?
yeah,
If you're going to step into property and say, oh, it's not going to be challenging and it's going to be super easy, it just you're living in cloud cuckoo land, and there's a challenge every single day. There's
yeah,
another brick wall that you you can't know everything either because it's a forever changing, evolving space. And someone will go, "Oh, you can't do that anymore." Why not?
Yeah.
Oh, because Joe Blogg said so. You're like, why? So yeah.
No, agreed. Well, I mean, yeah, like I think this, like every business, every sector, challenges, and but I think the key is figuring out ways around it, right? And I think the longer you're in it, and the more experience you get, the more you know which risks you can take or which things you just crack on with without necessarily getting the right permissions. That point in time, right? You can kind of do it and then get the rest of experience stuff. So. But anyway, I think it's time to wrap up. I've got plenty of hat shopping to do to keep my head warm when we get to Norway.
And gloves.
Yeah, and gloves, etc. So good to see you, gents. Thanks for everyone joining us today. I hope you found some of the discussion insightful. Of course, if you are willing and able to give us a donation for our upcoming challenge, that'd be massively appreciated. Once again, if you've got a business you'd like to get your brand out, perhaps on some national television, national radio, and also by supporting some of the charities, give us a message, a DM on Instagram. Or just drop us a message directly if you're part of our WhatsApp group. If you want to find out a bit more about the club, head over to our website. Link is below, www.propertyentrepreneurs.club. We've got lots of upcoming events in the southeast, particularly of England, that come along to completely free networking, opportunity to connect with other people in the sector who do it sort of on the ground, boots on the ground, doing stuff. It'll be great to see you, great to meet you. And yeah, if you've got any feedback for us as well on these videos, which probably will be mostly negative because it's,
Recommendation for topics.
recommendation for knighthoods, then let us know. Take care, everyone, and we'll see you on the next one. Cheers, gents.
Cheers.
Cheers, guys.
Bye.
Have a good week.